Global equity markets are cheering the latest spate of M&A action, and we are seeing the economic data as well as mixed earnings reports being digested. We do have a heavy week in terms of earnings as well as Fed comments. So joining me now is Peter Cardillo of First Standard Financial. Peter, thanks for joining me today.
Be back.
Well, as we kick off the week, we have plenty of M&A action. So what does that tell you about the outlook going forward?
I think the outlook going forward is good, and I think if you base it on M&A, if you look over the past several months, we've had a string of mergers and acquisitions, and of course, from Friday night till this morning, we had four. One which is a giant, of course, between American Telephone and Time Warner, and I am of the opinion that when you have a lot of M&A going on during the course of the year, that's a sign of confidence. So it's a sign of confidence on the part of companies, and it's a sign of confidence on the part of investors. So I think that points to probably a higher stock market going forward.
And this week we get plenty of earnings reports. It's one of the busiest weeks, if not the most of the earnings season. But we do have economic data coming out, including U.S. GDP, which we will all be watching for, as well as the Fed comments. So where do we stand now?
I think we're looking at growth close to 2%. I'm actually calling for GPT numbers to be pegged at 1.9%. That's basically up from that 1.5 level in this quarter, and probably in the fourth quarter we could be looking at growth somewhere between 2.25 and 2.5%, which bodes well for growth next year. And I kind of suspect that it's a steady grinding upward growth move, but nevertheless, it's growth.
And last but not least, as we stand here on the floor on this Monday, we're seeing the S&P 500 fast approach the 50-day average. But what technical levels are you watching?
I'm looking for a level of 2150 to 2160. We did manage to trade above the 2150 this morning, and I suspect that, the real resistance level is closer to 2160. So if during the course of the week, based on good earnings and good economic data, then I think there's a good chance that we can finally break away from this narrow trading range that we've been in. And, also, if you want to take into consideration a lot of the Fed commentary that we've been getting, all points to a rate hike in December. But I think the market has probably already discounted that.